Block, and suddenly we see with that single block that that's the trade and that's the trade and that's the only trade. Banks don't deal on a single price at a single time, they accumulate into areas. So when we see a lean evolving, we can see the big yellow dots are obviously the big starting points, the pinks are obviously bigger still, but when we see the yellow and then we see a red block, we know that we should be starting to work into this. We see blue dots and red, we know we should be working into that. We see yellow dots and green. Well, that's the capper, isn't it, Paul? That's your capper price. So you've got to know where that is and draw a line across it, right? That's got to be a price that you're now crystal clear it's on your screens. So now that you see that they're buying these lower lows, what you're now doing if you're a commercial is what? Putting in buy limits in these areas here, aren't you? That's where you put in your buy limits, and that's what these trades are here. And when that goes up, guess what happens here? They go below the market by another step, and they put in buy limits in these areas here, don't they? And those buy limits are what these trades are here. That's our trades, these passive commercial longs. So these red blocks here and those Voltics are our buys, assuming the algorithms are selling, assuming the stops, we're buying into that selling, and we're accumulating. That's what we're doing on a downtick. That's creating the lean for you guys to then lean against as a local, right? And as this one bounces off, what's going to happen next? We're going to go, remember, I'm not putting it right under the price. I'm putting it a little bit away from the price, and then I'm drawing in the buy limit orders again. There's the next block of buy limits. That kind of idea. And this is why you get these blocks here, and these blocks here. That's our commercial buying kicking in into those areas. And you as a local find one of those to lean against, perhaps here, boom, money's in the bank account, scratch, damn it. It's what happens sometimes. You sometimes get a +1. The price comes down into the next box and you start watching the blue, then the yellow, and you go, wow, yellow, blue, red, right, let's get a buy trade there, boom, straight into profits, love it. And then we start the process all over again. We've now got this price level here. And when you've got that price level, guess what I'm going to do as a commercial? I'm going to put a buy limit order into this area here. You get a Voltic. Interesting. There's your first lean on the Voltic. When that goes up and it comes back down, you're going to then go below it again, and you're going to say, right, I'm going to put another buy limit in here. And then you get another Voltic right there, and there's your next lean. And the next lean goes, and you make an absolute killing into this top edge where you can see all the capper trade areas, all the blue Voltics, all the buys getting jammed, the blue Voltics, the buyers getting jammed, and all that kind of nonsense that happens in these areas here. You already knew that was going to happen, and it did happen. So when you see this, you start to recognize the quality of these institutional trades with the leans. And if you were waiting for that to set up, your first trade would probably have been here. Your next trade would have probably been here. Your next trade would have probably been realistically here. Your next trade wouldn't have been this one because you didn't know this existed until it's gone. And then your next trade would probably have been here. And then your final trade would have been here. So you'd have had 1, 2, 3, 4, 5 trades. 5 trades. Every single one of them was able to get a stop at break even. Every single one of them. And you can see that if you're just patient, waiting for the right trade at the right price, and you get the right price that you want to deal at, you could make way over $1,000 per contract through that 5 trade sequence. And that's what you're obviously trying to accomplish, isn't it? That's what you're trying to get to as a trader. Good one to practice, good one to look at it for a second time and a third time to see where you've gone right and where you've gone wrong. Every time you've gone wrong, guys, that's where you get the best lessons. To reanalyze why you went wrong on that trade. Why did you miss that? What were you not seeing? What were you missing in terms of order flow or narrative? Go back over them and debrief your own trading so that you can see exactly what you're trying to see, exactly what you should have been seeing at the best of times, and then try and capture the best opportunities.